Hi there, welcome to Kneppy Invest and welcome to the 29th of May 2025. Time is currently 3:05 p.m, so about an hour and 5 minutes left on a fairly cloudy day in Brisbane, which I'm not complaining about because I'm facing to the west, and if it is sunny, I usually have to have the blinds closed, and they are open right now, so I can actually look outside. And if they were open on a sunny day, the sun would be blaring into my eyes, depending what time it is. So no complaints here. I do prefer having the blinds open. Now on the ASX today, we've had a okay day. No complaints from me, apart from maybe mining down a little bit, but all odds up 0.17%, XJO up 0.19%, and a pretty good day from tech up 0.59%. Now, the American futures are up pretty big. Last time I looked, Dow Jones was up about 1.5%, Nasdaq up about 2%. There are two reasons that the American futures have rallied during today. And I thought maybe the rally in the American futures might have seen us go a little bit higher than what we've seen. So maybe that is a small complaint I could have. So the two reasons why the American futures are up. First reason, there might be other reasons, but these are the two reasons I can think of right now. First reason is because a company, one of the biggest companies in the world, released their the first quarterly results this morning, just after their market had closed. And funny enough, that company is the stock of the day. So in a way, this is not an ASX daily rundown video because the stock of the day is actually listed on the Nasdaq. But in saying that, one of the reasons we've had a good day is because of this company. And one of the reasons Tech has had a good day today is because of this company. So I thought, why not have this company as a stock of the day? The other reason why American futures are up a fair bit is because, going to trading economics, US trade court blocks Trump's tariffs. So they are saying that Trump overstepped his authority in imposing reciprocal tariffs. Now, I've thought for the longest time that he had way more power when it comes to tariffs than he actually does. So I thought he could actually put on tariffs and take off tariffs at his whim. That's not true. He does have to go through Congress. Any president has to go through Congress when it comes to tariffs because they are a tax. But yeah, it's a different. Yeah, they are a tax. Yeah, they are a tax. I was going to say something, but that would have been really silly. But the only way he can impose tariffs without going through Congress is if it's an emergency, maybe even a sudden emergency. So that is what the Trump administration used to impose these tariffs, and really it was focused on trade deficits. So the argument from the plaintiffs, which was quite a few states and also businesses, was that there is no sudden emergency, and United States, has been dealing with trade deficits for 49 straight years in good times and bad. So I have no doubt, White House is expected to appeal the decision. So I have no doubt they will appeal. So this was just a 3-judge panel on the US Court of International Trade. And I think the market likes that, particularly if Trump can't do anything about this. And I don't think it would be wise for him to go over and beyond any sort of tribunal or panel when it comes to the courts. That would be a move in the wrong direction, in my opinion. Okay, so let's have a look at the ASX today before we go to the top 5 stocks of the day. And if I have time, we'll have a look at one of your comments. If I have time again, keep this to about 30 minutes. So yeah, pretty good day on the market today. The XJO, all odds have been up through most of the day, except for a little bit of time at about 11:17 a.m. But otherwise, it's been an okay day. No complaints from me. Who can complain about this unless you really short the market? If you've got all your money in B-Bus, what's the other one? B-Bear or whatever it's called. Best performing sectors today, energy, another pretty good day. Telecommunications. Funny enough, energy, I did have a look. Uranium companies were down, I'm pretty sure. Let's have a quick look at energy. It's another good day for Woodside, Santos, Yancoal. Paladin, Boss, and DPL are all down a fair bit. So this little rally in energy has been really by the natural gas and the oil, and Woodside now up to $22.70. I thought below $20 Woodside was looking good. Now it's gone 10% over that particular number or price. Good day for telecommunications. Telstra, is that Telstra? Let's have a look. I would say Telstra is by far the biggest in this particular sector. Telstra's had a good day, yeah. There you go, Telstra. IT's had a good day. Financials, banks, nice little rebound. And a negative day for materials and real estate. And typically, if real estate is down 0.75%, that's because of Goodman Group, because Goodman Group is by far the biggest company within that sector. So Goodman Group is down. Yeah, there we go. Sometimes I don't believe myself when I say something. Okay, and if you have a look at the ASX 20, where is it? Up 0.25%. I'm wondering if BHP, Rio Tinto, and Fortescue all down. We know Woodside's up. Probably all four banks are up. Macquarie Bank is up. I'd say Woolworths is down. Coles is down. So let's have a look. Let's have a look by market cap. And yeah, BHP's down. Where's Fortescue? Oh, Fortescue's up. But Rio Tinto's down 1.31%. Funny enough, only 5 companies down. And I think one of the reasons why only 5 companies are up, 15, only 5 companies are now 15 are up, yet the XTL is only up, what was it, 0.26%, is because those companies down are down big, and they're fairly big as well. So BHP, which has a market cap of $194 billion, biggest mining company in the world, mind you. Yes, the biggest mining company in the world is on the ASX. Share price down 0.78%. And the best performing companies in the ASX 20 is Woodside. I'm wondering, even though it's not the chart of the day, I'm wondering, let's have a look at the Woodside chart. Let's see if this is starting to look, just the chart. Hello, anyone home? Here we go. Oh, yeah, still not there with Woodside chart. It is looking a little bit better, but in the past year or so, it has looked better at times. And then whenever the share price gets above this, that's a 100-day moving average, the blue line there. We've seen it get it just above the blue line or the 100-day moving average a few times in the past. And then we do see a bit of selling coming in. So that would be my concern right now. But a nice little rally over the past month and a bit for Woodside. But I would still say this is in a downtrend, but there are possible signs the downtrend might be coming to an end. So a lot of ifs and buts there. Okay, so let's go back to... No, I think that's it. I'm going to go through the top gainers and top losers. I've already done that. And one of the companies in my top 5 stocks was found by doing exactly that, going through the top losers and top gainers. But the stock, company coming in at number 5 in the stocks of the day is Clarity Pharmaceuticals, CU6. Okay, so I decided to put Clarity into the top 5 because the share price was down when I made that decision. And at one point today, the share price was up. Was it up 8%? For some reason, I have a feeling the share price was up 8%. So we have seen a bit of selling coming in. I'm just going to confirm that. Yeah, share price got to a high of $2.36. So the share price was actually up 10% at its high today because they did release a price-sensitive announcement. First patient imaged in phase 3 amplified trial. Not the sort of announcement that would get me excited. I will tell you that much. But the market initially did get excited. It's just saying first patient imaged in phase 3 amplified trial. It's right in the description. It's not the sort of announcement that will really radically shift sentiment in a company. And that is what I'm looking for whenever the share price of a company is in a downtrend. Should we open it up? It's 4 pages long. The other thing I should mention is whenever a company is releasing a really powerful, strong announcement, the less pages you're going to see. In fact, the less commentary you're going to see. So in my non-extensive history as an investor, whenever I see a one-line, some sort of announcement from a company, a lot of times it's going to move the share price significantly higher or even significantly lower. But sometimes if it's a negative announcement, there's going to be a lot of commentary. But if a company releases like a profit upgrade, all they need is one line. All they need is one line. So here it is, first patient imaged in phase 3 amplifier trial. Yeah, I mean, it's not surprising. This is not a shock to the system, not a shock to the market. I'm not reading this going, oh, did not expect this. It was always going to happen. Yeah, anyway, so the market got excited and then the selling came in, which is sort of understandable. When you look at the chart for clarity, yeah, so share price has been in a long, depending how you define long term. So share price has been in downtrend since September. So we are talking about, what's that, 9 to 5. So that's about 8 months. It's been a downtrend. I'm not sure if I would consider that long term, but definitely the share price has been under pressure. And you can't really see the 1-day candlestick here. So we have seen a little bit of selling. And if you open up or look at the 1-minute chart, I would say the share price reached a high right on open. Yeah, there we go. Within 5 minutes of open, share price was up 10%, and then we saw the selling coming in straight away. And that also is telling me, when we see that the announcement is just not strong enough. There's just too much selling pressure and not enough buyers coming in, not enough enthusiasm from the buyers coming in to buy or gobble up all those selling shares. And that's exactly what we've seen with clarity. Now, in saying all that, there is still, in my opinion, a fair bit of potential for this company. But that's the most important word, potential or potential. And doesn't mean just because they have potential that they will realize that potential. But I'm a shareholder, and if anything, I'd be willing to buy more shares if the share price gets to a low enough level. Not there yet with clarity. Company coming in number 4, we have a fairly small company called Readcloud. This company share price is up 22.7% on release of the half-year results. And that's enough to maybe it should be higher. Maybe coming in number 2. But there are a few reasons to be wary about these results. Now, they were profitable, cash flow positive, and that's a good step in the right direction. But this company is highly seasonal. You definitely will be able to see that when I show you the financial numbers, not on a yearly basis, but on a half-yearly basis. This company's half-year results are always going to be significantly better than their second half results, and that's because they sort of sell, distribute e-software or software for e-learning, something like that. Software for e-learning, not, I was going to say e-software for learning. So software for e-learning, and education tends to be quite seasonal. And this company's best season is the first half. So let's have a look at this company's results. Now, it's still moving in the right direction. So even though I'm saying be a little bit wary about these numbers, they're really good for a half year. Doesn't mean we're going to see profitability and cash flow positiveness for this company over the full year. But nice organic growth, 14% in revenue. Underlying EBITDA increased by 73%. And cash inflow, operating cash inflow of 1.9 million. Now, I did have a quick look at their financial statements, and everything looks pretty good. So no complaints from me. So we do have revenue up 13% and profit up 214% to 1.3 million, underlying EBITDA up to 1.8 million. And typically when I'm looking at these companies is I just want to see if the company or how cash flow positive they are. So operating cash flow positive 1.9 million and free cash flow positive by almost the same amount. I would say I'd probably put payments for software development into the capital expenditure. That's just me, because that's a real expense, an ongoing expense. So I'd probably say they're free cash flow positive by about 1.7 million, which seems pretty good for a company with a market cap of, I was going to say 7 million. I don't think 7 million is right. I'm going to say 10 million, 20 million. There we go, 20.74 million. So definitely 7 million was definitely not right. So this company has a market cap of 20.7 million. So this company is profitable, cash flow positive. and have a market cap of 20.7 million. They're also growing. So what I'm going to do is just show you this company's financial metrics over the last few half years. So the last 5 or 6 half years. First thing we're going to look at is revenue. And this will show you how seasonal this company is when it comes just to revenue. So this is in half-year increments, and the first half definitely better than the second half. We can see that over the last 3 years. So in 2022, it went from 6.9 million the first half to 1.3 million. Last year, it was 7.2 to 3.1. No, actually, that was 2 years ago. And then last year, it was 8.1 million to 3.8 million. So increasing, and this is another really good example of why you need to compare to the previous corresponding period, not to the previous period, because if you're comparing to the previous period, you'd see a massive growth in revenue this particular half year, but in the second half, you'd be going, oh, gee, revenue has significantly dropped from the previous period. So you have to look at the previous corresponding period to smooth out any seasonality. And this is a really good example. Now, what I'm going to do is just have a look at profit. And I'm going to get rid of revenue. And you can definitely see here. So every year for the last 4 years in the second half, this company has been highly loss-making, over $1 million in a loss. So the most important thing moving forward is company is now profitable by over $1 million. If they can be profitable for the whole year, that would be in the inflection point for this company. In fact, a really good inflection point for this company would be profitable in the second half of the year. The other thing I'm going to look at is cash flow. And what I might do is look at operating cash flow and free cash flow. Free cash flow. And I think they probably don't include software development. I would. And you can definitely see the seasonality here. In fact, we don't have to look at free cash flow because they don't really count that software development, and otherwise this company doesn't have capital expenditure. But you can definitely see how important taking into account seasonality is for this company. But it looks like they have possibly reached an inflection point when it comes to cash flow, because even last year, they were operating cash flow for the full year. Anyway, so that's Readcloud. Looks like they have at least getting very close to an inflection point. Now let's have a look at the chart. And the share price is up 22.7. So the market does like these results from this fairly small company. Okay, so the chart looks pretty good. Share price moved into an uptrend back in the middle of 2024. So about a year ago, just over a year ago. At that point in time, share price was around 5 to 5.5 cents. And yeah, pretty good. Does look like 13th of May, share price popped up 28.6% on that day. 13th of May, let's have a look to see what happened. Oh, there was nothing. Just a bit of noise. Just a bit of noise. That's interesting. Maybe that was in anticipation of half-year results. You can see just before that really big day, there was not much volume. There was I suppose relatively there was, but there was some really big spikes in volume in late April. 3 big spikes in volume. And surrounding that, there were some good volume days as well, relatively speaking. Even back in June, July last year, we did see some nice volume coming in. And that was when the sentiment did change. So the chart actually doesn't look half bad. And I'd say probably it's illiquidly traded. Yeah, only 15 trades today. And I'd say there are some days where there's not much trading. Yeah, there are some days where there's very little trading or no trading at all. Okay, so that's Readcloud coming in at number 4, a very small company on the ASX. Coming in number 3, we have the company Trigg Minerals that I did find going through the day's top performers. Share price up 21.74% on another announcement that I would not get that excited about. But there's a lot of excitement in antimony, and they just released that they're advancing their antimony Canyon project in the USA. So that's all they had to really release, and the market's a little bit excited about this company, really excited about this or any sort of antimony project, and just saying advancing, oh, we're advancing, well, they're advancing this project, oh, let's buy some shares. The other thing I noticed is they always put their announcements, the title of the announcements in large caps, Well, not all of them. Some of them are not. Maybe when they want the market to be excited, they pull it in all caps. Strategic large-scale US antimony acquisition. So it looks like they acquired this back 10 days ago. That's not long ago. Anyway, the other thing to take note about this company is the chart. Chart has just gone bonkers over the last 10 days. Yep, and it was based off this acquisition, looks like. Share price has gone absolutely bonkers. I personally would not dare not trade this one. I would not dare chase this one because the share price has gone way above the moving averages. And whenever I see this sort of rally in the share price, eventually I'm going to expect to see a little bit of selling coming in. Now, when you do see selling coming in, doesn't mean the share price would pull back. It just means the share price might go sideways. And if the share price goes sideways for a period of time, that's actually a really good sign. So what I'll do if I was really keen on Trigg Metals would be just wait to see a little bit of selling coming in, wait for the share price to go at least sideways or pull back. Like the share price right now, for it to pull back, that I might get excited, would be around about 5.5 to 6 cents. So that's Trigg Minerals coming in at number 3, advancing their antimony project. Coming in at number 2, we have Aroa Biosurgery. Share price up 6.38%. Was up about 13% earlier. They did release their results today. This is a weird one for me. Aroa Biosurgery releases announcements and then share price could go up or down like a yo-yo. It just seems like they're on the same trajectory the whole time. But for some reason, the market just changes its sentiment on this company positively or negatively on the slightest whim. I don't know what it is. Okay, so this company is moving in the right direction. So we've already mentioned Readcloud is very close to hitting their inflection point. Maybe they're just over that inflection point. And I think Aroa Biosurgery is definitely on that path as well. Now, this is a bigger company than Readcloud. And in fact, if I'm going to guess the market cap, I would guess 200 million. Oh, 175.9 million. And there might be some value in this company. So nice increase in revenue. By the way, this is a New Zealand-based company. So they do report in New Zealand dollars. So revenue, 84.7 million New Zealand dollars. So that's about 5 cents Australian dollars. I kid. So 84.7 million New Zealand dollars. Nice growth, 23% growth. It also exceeded guidance. I forgot about that. So their previous guidance was 81 to 84 million. So this was a beat. What else? Gross margins of 86%. That's something I'll definitely focus on over the next 5 years. I want to see them maintain a nice gross margin. Normalized EBITDA profit of $4.2 million, exceeding guidance of $2 to $4 million. Achieved positive operating cash flow in the second half of the year, with cash flows from operations of $2.3 million in that period. And they also have $22 million of debt. They also released an outlook. Not a lot. I don't know. So a lot of times you won't see a company when they release their full year results release any sort of outlook. There's still a lot of uncertainty. So I always like it when a company does have an outlook because it gives us something to aim for. And it gives also the company and their employees to aim for something as well. And I think that's very beneficial for all parties involved, particularly if you're working for the company. It's one of the reasons why I love 5-year goals, because it gives everyone an aim. And I just think it increases motivation. That's just me. Anyway, so they are aiming for between 10 and 20% growth in revenue and normalized EBITDA between 19 and 90% growth, which is a big range, but a normalized EBITDA expected to be between $5 and $8 million. Okay. So in all these sort of situations, I love to look at the cash flow, and this is a cash flow statement. So on the 4-year basis, not quite operating cash flow positive just yet, but based off the second half and also the guidance for financial year 26, I think this company is so close to that inflection point. In fact, I'd be willing to say maybe they have reached that inflection point. And the reason I love these sort of inflection points is because if they are operating cash flow, free cash flow positive on a continuing basis, that means the company doesn't have to go back to the market to raise any more capital. Unless they make a massive acquisition or something like that, they don't have to. They can fund their own growth. And that's really important, to be able to fund your own growth, and Aroa Biosurgery might be very close to that point. Very close. I think I need a little bit more confirmation, but I think if you're way more risk taker than me, maybe you could go, wow, this is now a raging hot buy. Now let's have a look at the chart for Aroa Biosurgery. And share price has been a downtrend. And as you can see, share price dove significantly in January, 24.4% on, can't even remember what they did. To 29th of January, what was it? Oh, the Appendix 4C. I still don't understand why the market sold off on this. It was a weird one for me. They were operating cash flow positive, slightly. So it says 1.2 million, but they did receive some grants and tax incentives. And if we have a look at the most recent Appendix 4C, so that's another thing I like about this company. They released Appendix 4Cs. They were operating cash flow positive by over $1 million in this particular quarter without government grants and tax incentives. So I do think this company is very close to that inflection point, and I still don't know why the market sold off in January. Anyway, we have seen a bit of a little bit of selling coming in today, just based off the one-day candlestick. It's sort of understandable because the share price was significantly higher at the start of the year. So there's going to be quite a few shareholders underwater, and they want to get out of this dog stock. So even though the share price has rallied today, they still think it's a dog stock. And if you do have a look at the longer-term chart, share price, in fact, let's have a look at the weekly chart. Share price has been a downtrend since they listed back in 2020. In fact, I do have a downtrend line. So that's another thing you do, is just wait for the break of the downtrend. It's not a bad downtrend. So all I did was go from the high when it listed to the next high, major high, and then the next major high almost lines up perfectly with those two highs in a straight line. Anyway, but yeah, so if you just have a look at the weekly chart, share price still in a downtrend, but very close to inflection point. So you could say the company is much better placed right now than it's ever been as a listed entity. Okay, coming in at number one, we have Nvidia. Nvidia did release their quarterly update, surprised the market. It was a beat. It was a beat. How should I do this? Actually, what we'll do is we'll go to, if I can find it, I'm pretty sure I've bookmarked it somewhere here. Earnings calendar. And we'll go to Wednesday. And I'll also zoom in. Here we go, earnings calendar, Nvidia. Salesforce also released their results. That's, I suppose, pretty big company, has a market of $266 billion. So that would be like the biggest company on the ASX if it was listed here. And by the way, tomorrow we have Costco releasing results as well. And also the Royal Bank of Canada and Dell. Okay, now anyway, so Nvidia has a market cap of $3.3 trillion. Yes, $1 trillion. So you might be saying, wow, that's way too rich for this company. But what I'd like to see is after hours in share price, in after hours trading, after the release results, up 4.35%, because this was a beat. They beat expectations. And the other thing what I'm going to do is just tell you how they beat expectations. And then what I'll do is we'll do a really rough P ratio of Nvidia right now, because I still think there's people out there who believe this company is so overvalued. Oh, P ratio 5 billion or 10 trillion or something like that. But when you have a look at their earnings, profit, how quickly they're growing. Now, there could be some questions that really their growth focus right now is on data centers, and how long is that going to last? And they are highly reliable on data centers. But okay, so here is how they beat expectations. So $44 billion in revenue in the quarter. That was a beat. So expectations were for $42.7 billion of revenue. And earnings per share, I've got it here somewhere. Earnings per share, earnings per share was a beat as well. So, oh yeah, here it is, 0.85. Oh no, yeah, earnings 0.85 and Now, according to this, the earnings were lower than expected. I'm getting confused here. It says they reported 0.81 earnings per share, and consensus was 0.85, but then revenue was greater than expected. They also released their expectations for the second quarter, and I think those were a slight beat as well. Okay, so they are expecting still pretty good growth in the second quarter. Also, Jensen had a nice little comment here as well. Our breakthrough supercomputer, a thinking machine, the Blackwell NVL72 AI supercomputer designed for reasoning, is now in full-scale production across system makers and cloud service providers. Global demand for Nvidia's AI infrastructure is incredibly strong. AI inference token generation has surged tenfold in just 1 year, and as AI agents become mainstream, the demand for AI computing will accelerate. Countries around the world are recognizing AI as essential infrastructure, just like electricity and the internet. Now, the majority, by far the majority of this company's revenue, Nvidia's revenue, comes from data centers. So for instance, I do have the numbers here somewhere. If I can find it. Here we go. So data center revenue is 39.1 billion. So overall revenue is 44 billion. So they have a lot of their success in data centers right now. I'm just confirming here. Yeah, earnings per share in this site was a beat. So I've got two sites. I'm looking at a couple of sites here. So earnings per share were a beat. This site's a little bit better because they also have gross margins. Gross margins were actually down a little bit, but they were a beat as well. And their guidance also were a beat. 1.1%. No, revenue guidance was slightly down from guidance, but gross margins was a beat. There you go. So all these news sites all over the place. I actually did ask ChatGPT about this. So I said was Nvidia Q1 results versus expectations, and this is what it gave me: revenue of 26 billion. I went, that's wrong. That's wrong. That is wrong. No, they did mention some right things here. So the market reaction, yeah, up 4% in after hours trading, and then I just said no, 2025, not 2024. So what it gave me, and the reason I knew this is because they give you a link. And if you actually hover your mouse over this link, you can actually see when these articles were released or the information was released. And it was 1 year ago. So you have to be a little bit more specific, because they even said here, NVIDIA's fiscal Q1 2024-5 results significantly surpass expectations. But you do have to be careful with ChatGPT. Here we go. This data center revenue, that's right. And let's have a look. But the other three bullet points there are wrong. The 10-for-1 stock split is a year old, and the AI infrastructure expansion is up to date. So what I did was I just said no, 2025, not 2024, and it corrected itself. Yep. So there we go. Revenue, earnings per share, yeah. 96 cents beating anticipated 85 cents. Data center revenue, gaming revenue, only 3.76 billion. So this company's initial success was on gaming revenue, and it just transitioned to data center revenue a few years ago, and that's just ballooned. Okay, so here we go. Earnings per share around about 96. So this is a 1 quarter, 96. So let us do this. So Nvidia. And what we'll do is go to the income statement. So earnings per share, they don't really have it here. It's just like 0.1. This is in the opposite direction. Okay, so earnings per share, this is what I'm going to do. I'm going to analyze it. This is 1 quarter, and it's really a bad habit to analyze this sort of data. This is the first quarter, but they had, we'll just say $1 in earnings for the first quarter. Let's just imagine they don't increase their earnings for the rest of the year. So they have earnings of $4 for the whole year. Company share price right now is Nvidia. Share price right now is $134. Share price $134. So if you calculate the PE ratio, 134 divided by 4, what is that? That is 33. P ratio is 33 on an analyzed, which is not a good way to do it, on an analyzed first quarter earnings. I think there's a good chance the company will significantly increase their earnings through the rest of this year. So in fact, their earnings might be more like 5, which means the company has a P ratio below 30. And what is the P ratio of CBA right now? It's around about 30. So you can actually buy this quickly growing company with, sure, there is a possibility some of the growth might temper off in the next few years. And sure, they may be a little bit over-reliant on data centers, but AI and the thematic of AI is not going away anytime soon. It might slow down at times, particularly if we are in any sort of slowdown in the economy. But what can you say? And I actually did see a really good article on this, talking about CBA and why it seems like most of the people buying CBA are local. And if you just compare like CBA to a lot of companies in the world, the question becomes, why are you focusing on this local company when you could buy all these much higher quality, well, maybe not higher quality, but better growing companies that have a chance to be much bigger in the future? Why are you buying this company that's not going to grow all that much? At a higher multiple. That's the other thing, at a higher multiple. So we're in crazy times right now when you have to compare the valuation of CBA to Nvidia, Alphabet, and those two companies look better value just on the PE ratio. Chart for Nvidia, share price has been going sideways, really, for about a year. That's amazing. Share price has been going sideways for about a year. Anyway, so that's all I have for today's video. Went a little bit longer than expected. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.